Hi, my name's Adam Bethel, and I want to thank you for joining me for this second video today. If you're watching this, you either watched the first video we did or you came to a live event that we did at a high school in your area. I really hope that the information we're going to cover today will serve you on your journey to sending your kids to college. The first time we talked about expected family contribution, what it means, how it's determined, and how it equates to your eligibility for need-based aid. We talked about how schools determine eligibility for need-based aid and how they meet that with gift aid and self-help. We also gave you some case studies, some specific examples of ways that people are occasionally able to lower their costs for college. One of the examples we showed was a family that was able to decrease their expected family contribution and increase their eligibility for need-based aid. Today we want to give you the how-to of all of that information. The first thing we want to do is show you how to navigate a website that gives you the information of what the cost of attendance is for all the schools, how they meet need historically on a percentage basis. This is very valuable information. We also want to show you how to calculate your expected family contribution if you were going to be filing a FAFSA today. This is very important. Maybe some of you are still a ways off before your first kid goes to college or your next kid goes to college. But you'd like to know, where would I stand today if I file? And I think that's very valuable because you may find out that there isn't something you could do to influence your ability to get more financial aid down the road. One of the things we're going to talk about when we're going through that section is how you might be able to decrease your expected family contribution. So by the end of this webinar today, you should have a lot of great information and really be armed with everything you need to know specifically to be able to help yourself through the process of getting the best financial deal possible for college. Let's get started. The first thing we want to look up is the cost of attendance at any school. The website I recommend and will be referencing frequently is the College Board website. This is the homepage at bigfuture.collegeboard.org. To look up any school, simply type its name here in the search bar. For our first example, we'll use Harvard, a school everyone has heard of. It takes you to your search results, click on the name of your school, and you'll be taken to that school's homepage. Here you'll see pertinent information about the school, what size it is, if it's private or public, graduation statistics, financial aid statistics. But the first thing we want to pay attention to is down this sidebar right here. And at the bottom of this, there is always a tab that is called Paying. You'll see I've covered up the address bar and scrolled down to keep these schools anonymous, but I've clicked on the Paying tab to show you what this page looks like. The first school is a large public school. Here you'll notice that the total cost for in-state on-campus is $25,745. This page is also helpful in that it shows the difference between on-campus, off-campus, and at home. You can also toggle between in-state costs and out-of-state costs and see those numbers change. This is very quick and easy. I've also included a small private school and a larger private school for comparison. You'll notice with both of these schools that if you click in-state and out-of-state, the price remains the same. This is the smaller school, and you'll really see a jump when we go to the bigger school. But the same thing remains true, that the cost is the same for in-state and out-of-state. So now you've seen how to research and find out how to look up the cost of attendance for any school. It's very quick, very simple, using the College Board's website. Here's a summary of the three schools we've looked up and their cost of attendance, assuming in-state on campus for each. So I showed you how simple it was to look up the cost of attendance. Calculating your expected family contribution is not quite as simple. However, the good news is the College Board has another great resource for you in an EFC calculator. So while you're on the College Board's website, just search an EFC calculator and it should bring you to this page. Expected family contribution calculator right here. When you go down, you'll see the welcome page and click Start. and it's going to ask you a handful of knockout questions to make sure that your student is a dependent. Assuming that all of those answers are no, and I will, you'll go forward into a choice between the federal formula and the institutional formula. The federal formula is what's used with a FAFSA. The CSS profile is what kicks out the institutional methodology. For here, we'll click just the federal. And the next thing we want to look at is the family status. This is a family of 4, mom and dad. Dad is 46, mom is 45. Child number 1 is 18, and child number 2 is 15 years old. And we'll make them from the state of Alabama. So here again is all of the information about the family. The student's age, it is assumed, is going to be in college. If you have twins, it is easy enough to make them both be in college by doing this. But for these purposes today, we will say that this sister is younger. So the information that we plugged in for this family is an income of $80,000. So each parent makes $40,000. However, they each put some money into their 401ks at work, so their adjusted gross income is $76,000. The student makes $3,000 and pays no income taxes, but the parents pay $10,000 of federal income taxes on their income. And they have $10,000 in bank accounts, and the student has about $1,000. Now, when we go down to the next section of other real estate and investment equity, the parents have $75,000 and the student has $12,000. Remember, it's crucial here not to include equity in a home or 401k or other retirement assets. So when we see the results, we click over here, and the expected family contribution for this family is $14,117. So now we put it all together and see the cost of attendance and the expected family contribution, and see what kind of need-based aid this family is eligible for at each of these 3 schools. The reason we use this format is so that you can go through this exact same exercise yourself and find out what kind of need-based aid you might be eligible for. You can see from this example that it could be a wide range of need-based aid from $11,000 all the way up to almost $49,000. So now we need to find out how these schools meet need. So now that we've seen how to look up the cost of attendance, you know how to get an estimate of your expected family contribution. Let's look and see how these schools that we've looked at previously will meet your need. So, going back to the screen that we've seen before, here's the cost of attendance page for School A, the large public university. And this time, instead of looking at the cost of attendance tab, we want to scroll over to financial aid by the numbers. This is the tab that gives us the information we're looking for when it comes to how the school will meet our financial need. The first number is the total percentage of need met. The second thing we want to look at is the percentage of scholarships and grants, which I like to call gift aid, versus the percentage of loans and jobs, which I like to call self-help. Now, just for reference, let's go to the small private school and look up the same numbers available here and right here. And finally, the third school, the most expensive school, and we go to financial aid by the numbers. It looks pretty good. So when we put this all together, what does it look like? I've created some oversimplified award letters to illustrate. First is School A. Congratulations, here's your financial aid award. A $1,000 scholarship, a $1,000 award named after the school, a $5,500 student loan, which is standard for any freshman that fills out a FAFSA, And finally, the rest is typically offered in the form of a parent loan for undergraduate students. That's what PLUS stands for. Let's examine this a little bit closer. The $7,500 of scholarships and student loans is part of the eligible aid met by the school. That is approximately 65% of the $11,628 the family is eligible for. On to School B. Here you'll find a little bit more gift aid and the addition of the work study being added in. But the PLUS loan amount, or the rest of the story, is only about $1,600 more than School A despite the increased price tag of the school. Notice here that the first 4 lines add up to $16,000, which is almost exactly 74% of the $21,765 the family is eligible for. And if we break it down further, the $9,500 of gift aid compared to the $6,500 of self-help is right at the 60-40 split the school historically offers. By the way, in case you're wondering whether or not they always handle it this way, they don't. We'll cover what to do in that scenario in just a minute. School C is the easiest because they are meeting 100% of eligible need. In this case, the easiest thing to do is to compare the PLUS loan amount to the family's expected family contribution, and you'll see they are the same. Now that you've seen some sample award letters I created that are intentionally by the book, I want to briefly explain what to expect if you get an award letter back that doesn't go by the book. If that happens and you've taken the time to do this research and you understand that you should have received a different award, it will be up to you to request a correction from the school and up to you to give justification to that request. Remember that this family makes $80,000 a year and is responsible for between $19,600 and $25,300 per year for their first child for college. So while you now know more about how to determine your eligibility for need-based aid and how much your family will be responsible for, the question still remains, how will this family or yours pay for it? I believe this to be a crucial part of this process and the part that is given too little thought by most families. While it is true that the students can borrow a portion of the money with student loans, the lion's share falls to the parents, and the current terms for the PLUS loan is 7.9% over 10 years, which is very unappealing. You may want to watch this video again because we went over a lot of numbers rather quickly, but I do think there were some very important concepts that we covered. At the end of the day, the most important thing for you to understand is how you're going to utilize your precious resources to send your kids to college. Of all of the things that we assist people with, one of the most beneficial services we provide is helping people understand how to most efficiently and effectively utilize their money. If that's something you would like to discuss further, I would like to invite you to call our office at 573-303-0708 to set up a complimentary phone consultation with me. Whether or not that's something you'd like to do, I hope this video has served you well. Thank you for spending some time with us. Have a great day.